So I have 2 o'clock, and so we're going to go ahead and kick off. My name is Joshua Caulfield. I'm the CEO here at NSA, and I want to thank you all very much for coming. We're really excited to have our subject matter expert, Mark Nelson Jr., here with us today, and we're going to dig into a couple of things. Before we begin, I want to do a couple of announcements and some housekeeping issues. So, the first housekeeping issue I will put on is that if you are not muted, please do mute yourself unless you have something you would like to say, and then go ahead and unmute yourself at that time, and you're welcome to talk. There will be plenty of opportunities for conversation for those of you who have attended these before. You know that I will be happy to call on you and integrate you into the discussion so that it's not just Mark talking all the time. He also is pleased to hear that, I am sure. But the good news is that we really have a wonderful attendance here, and we had almost 150 people register for this event, which is one of our largest numbers. So I expect we'll pop over the 100 mark of actual attendees. We are recording the session, so just be aware that if you are on video or you are speaking, that you are being recorded, and we will be putting this out later on. So do not show or tell anything that you feel you would not want to tell in public or show in public. And I will leave that at that. If you are not visible and you would like to be, we would be delighted to have your video as part of this, although that is not necessary for you to participate. You can participate without turning your video on. If you don't know how to turn your video on, just go to the chat and chat Kemi directly and ask him to send you the link to turn you into a panelist. That does not mean you have to speak. That just lets us turn your video on. It's simply a matter of the way that the technology works. Only panelists are able to be videoed and presented at this time. I want to tell you we had a wonderful annual meeting, virtual annual meeting last Thursday. The video of that I had hoped to have up on Monday. We ran into a little bit of technology issues, as I'm hopeful you all recognize. Technology is fantastic when it works, and when it doesn't, sometimes that can be very frustrating. We are dealing with the latter right now with regards to that recording. That being said, the recording is fine. We expect to have it up by Friday, so that will come out. One of the important things that I want to mention to everybody here is that we did have um, a vote. We brought up some bylaws changes, and because of the number of people who were on the annual meeting, we wanted to make sure that plenty of people had the chance to speak on a bylaws change. So we will be putting that out to vote. Again, all of that is prepared and ready to go on. We just want to have the annual meeting video ready to go with it. And so that'll all come up on Friday. We will have the voting run for 2 weeks after Monday. So it'll run from starting next Monday. It'll run for 2 weeks, and you'll have plenty of chances to review the bylaws changes and vote on them. They are not cumbersome. They are just allowing the NSA Board of Directors to appoint people who are not members of the board or who do not hold specific positions to areas of responsibility with ACAT or leadership of specific committees. It's really an administrative function, and it's the idea behind it is to let more members get involved and not restrict things to the board of directors. We're trying to be more transparent and more accessible to the members. Even if they don't want to be part of the board of directors, they can still participate in the leadership. So those will be coming up, and we'll have a full announcement of that. As I mentioned at the annual meeting, we will do 3 email blasts to let people know, and we'll have it come out in the newsletters in the weeks that it is open. So 2 newsletters will come out. And oh, somebody got a little excited. I'm going to go ahead and mute you. So anyway, so that leads to that. We also are bringing back education and CPEs. We've had a lot of discussions about that, and that was something that was brought forward to the board by a number of members. We had to take it down because of the way in which CPEs were required to be held and done. We have found through some investment in technologies ways to be able to provide that with the limited staff that we have, and you'll see a lot more of that information coming out. If you are interested in seeing specific topics, or if you feel comfortable being a subject matter expert in any given area that is CPE worthy, please let us know. We'd love to have you be part of the team as we develop more and more content and as we put these things together. Just you can email myself, you can email Kemi, you can email Jency, you can email Randy Brandt. Whoever you'd like, just get the word over to us that you're interested in being part of it, and we can do something like we have with Mark, where we'll work with you on a topic and flesh out some things and make sure you feel comfortable, but you don't have to sit up here alone, running all the slides and having all the technology pieces. We'll take care of that side of it. Tomorrow is another issue of the Ledger coming out. For those of you who may not have noticed, we do on the third week of every month, we do our policy newsletter. We've labeled it the Ledger so that you know that it's a little bit different. I'm very excited about this one that's coming out. We've really fully implemented our new system of bill tracking and reviewing stuff that's going on, as well as accessing some AI tools to be able to get into state and local and practical applications. Please take a look at the ledger if you see it come into your inbox. If you don't see it come into your inbox, let me know and I'll make sure that we haven't accidentally taken you off the list. And let us know. Give us your feedback. Is this the type of stuff that you'd like to see? Is there anything you'd like us to focus in on? Would you like it longer or shorter? Would you like more links? Would you like less links? Whatever types of things you want, we want to tailor this to you. And we're really trying to tie this into the Federal Taxation Committee and create the opportunity for more of you to get involved with advocacy if that's something you're interested in. And finally, again, I will mention that if you'd like to be visible, please send Kemi a quick note and we will add you to the panelists group and we can get you on video. So, without further ado, I'd like to go ahead and step into the topic. And first, I'd like to introduce Mark. Well, actually, I'm going to ask Mark to introduce himself. Mark, will you tell us a little bit about yourself, your practice, and how long you've been with the NSA and your background in this topic?
I have been with NSA for, I think, '04 is when we became members of NSA here. So I've been a member ever since. I've been doing taxes for, I don't know, 25 years, something like that. So I was just a teenager, but um, yeah, I'm Mark. I'm in Wisconsin. Um, so I don't know what else you want to know about me.
That's great,
But
Mark.
yeah,
How big
I'm
is
not a
your
public speaker.
you're doing great. How big is
Uh,
your practice?
we've got about a little over 2,000 clients.
Nice.
Um,
And do you
so
have a specific focus?
Mostly individual taxes. That's probably the bulk of it. Then there's probably, I don't know, 150 like entity returns that we'll do. But the bulk is just individual stuff.
Fantastic.
So,
All right, we'll go ahead and dive in if you're ready.
all right.
What are the headline tax changes in H.R.1 that would most immediately affect your clients? And how, and well, let's start with that, and then I'm going to ask you how people can prepare.
Um, well, I think a lot of it is we don't know, right? So even just last week we had an IRS news release that came out and said, "Hey, we're not going to change the W-2s or the 1099s for 2025." So we have these new deductions, right? We have tips, we have the overtime deduction, and to get the deduction, it's supposed to be reported on the W-2, the amount. So what does it mean for the deduction? At some point they're going to have to come up with some transitional relief because they're not just going to say, no, you don't get the deduction. But what are they going to, how are we supposed to come up with these numbers? Right? A lot of people think that the overtime deduction is just whatever I work the full time and a half, but it's not, it's just the 0.5, right? So if the employer isn't reporting this on the W-2, what are we supposed to use? Just everybody just everybody gets the full 25 grand. I don't know. So I guess we'll see what happens there. But I think there's like other than that, I think there's like a lot of misunderstandings on this law. All four of the main new deductions, the tips, no tax on overtime, auto interest, and Social Security, right? None of those deductions actually impacts AGI at all. But yet, all of the articles that I see or the newsletters that come out, they all talk about it, reducing AGI. But the actual text of the law says that there's Section 63 deductions, not 62. So 62 is what the deductions that count for AGI, and 63 are the ones that are after AGI is deducted or after AGI is figured out. What do we have left? What other deductions can we take after AGI? The biggest one that we've historically had is the QBI deduction, right? The QBI deduction is a 63 deduction. It's a deduction that has its own line on the tax return. We don't have it on Schedule 1 because it's not a deduction for AGI, it's a deduction from AGI. And these new deductions are going to be in that same category. So are we going to get a new form for all of these now, or are we going to have everyone just gets its own line? Um, but oh, and then yeah,
Sorry, go ahead.
I was gonna say some of the other things that it's that we need to deal with right now are the ones that we're getting the questions on. Right, the biggest ones are going to be ones that in my practice anyways has been on the whole no tax on Social Security, but that they're like Social Security doesn't impact that at all in this. It was never going to be, and I think it's largely misunderstood. Right, the idea of not having tax on Social Security would need to be a bipartisan bill, right? The Congress used the reconciliation process to get this bill done. So they used the reconciliation process to get this bill done. And one of the requirements from when they came up with the whole idea of a reconciliation process from 1974 is when it was created. But one of the rules is that it specifically bans being able to change certain aspects of Social Security and its funding mechanism. So it was never an option to mess with Social Security with this bill. Um, but because it's related or it's a lot of people think it's related to Social Security. It's, well, what if I'm on disability? Well, that doesn't matter. If you're not 65, you don't get it. What if I draw at 67 or 70? It doesn't matter. It has nothing to do with Social Security, right? It's just if you're 65, you get the extra deduction on top of that other extra standard deduction that you were already getting. Um, but tips I think is going to cause some issues. Um, some restaurants will have the service charge or the mandatory tip that says, hey, if you're in a party of six or whatever, you're going to pay us an extra 18% as the mandatory tip, and that's not going to count. Um, but other things, another change that I think was largely overlooked is the tip credit expansion to the beauty industry, right? We have a tip credit that we've historically had that was just for restaurants, right? So the tip credit would reimburse the business owner essentially the bulk of the Social Security tax that the owner paid on the employees' tips. That we've only had that for restaurants, but now that credit is now expanded to the beauty industry. I've got a client that he's got a couple of salons and it makes 300 or 400 grand in profit a year altogether. But his employees make about 300 grand combined in tips. So this new credit is a $23,000 tax credit that he'll have that to offset his personal income tax. Um, so I think that's pretty massive here. But what were you going to ask me, Josh?
Sure. So I was going to run down some of the questions that have started to come up on the in the chat. So my first question is, I don't know if you do payroll for some of your clients, but are you planning on how Anitra had put perhaps looking at the pay stub, and that leads to the question of how will this break down into people's pay stubs, and are payroll companies prepared to break this out if it's not affecting the gross income.
Yeah, absolutely. That's a great question. I mean, one of my ideas was, well, with this transitional relief, are they going to say, hey, we can just use the pay stub or some other statement that the employer provides? I mean, like on my pay stub or the ones that we do with through Sage, it doesn't list the year-to-date overtime. I'm sure we could change a setting in there so it does, but it lists the overtime for that period. But then the year to date number, I don't know if there is. And maybe there's. I'd have to look at one of my old stubs, but ultimately that number is just going to be what that time and a half was, right? So somebody that's just doing their own tax return just going to say, well, I'm going to plug this number into TurboTax and this is my deduction. Well, it's not really that. Your deduction is really a third of that because you only get the deductions only on that 0.5 kicker. It's not on the full time and a half. But most people don't know that.
Right. Hi, go ahead. You've got a
Yeah,
question?
yeah. The question I had, I mean, Mark, if you've got an opinion on this at all, or anybody else does for that matter, is this is a change that was made midway through the year. I mean, what up until now, nobody even knew this change was coming. So, how is that going to be accounted for, if at all? Overtime that was worked before now. That's not going to, presumably show up anywhere. And it's certainly not going to show up on the new W-2 form because there isn't going to be a new W-2 form.
Absolutely. And well, just even thinking, like I know California has their own overtime rules. I know my brother-in-law works at UPS, and when he was part-time there, they would get overtime for working over 5 hours in a day. That doesn't count. Like you're paid overtime, but as far as the tax deduction is concerned, it's only overtime that's required under the FLSA that counts for the deduction. So there's supposed to be this separate accounting for overtime that is required under the FLSA versus overtime that you were paid because your state has more generous rules or your employer has more generous rules. And that separate accounting, that number is what was supposed to be reported on the W-2.
Yeah, it just
But if this isn't going to happen, what's somebody supposed to do, right?
yeah, I mean, it just seems like at this point it's going to be putting a significantly larger burden on the employers,
Mhm.
and payroll reporting services than it is even on us because we can't do anything without the information. I mean, we certainly can't swag it.
Right.
That's just going to be a real issue for us. And if we don't have the information on a pay stub or somewhere, we're going to be stuck.
Mhm.
I mean, is there going to be a due diligence thing? Is that kind of stuff going to come out?
Right.
Another page of the 8867, with stuff that we're going to have to do to verify that, we verified that this deduction is correct. And this is scaring the hell out of me.
And that ties into something that Lewis said about overtime being broken out, and also with who's going to educate the employee. So is the employee responsible to know this and to know how much that they are bringing out? Or is this because this is something one would expect the employer to be presenting to them as a number? And even if they did track their own, how do they document it and present it on their tax forms in a manner that the IRS is going to accept in 6 years? Jim, you had your hand up.
Yeah, I'm assuming, and you know what that does, that we're going to have to report it in box 14. We put a lot of information in box 14, and I'm assuming that's what the IRS is going to finally come out and say. And then do you put the whole overtime or do you only put the premium? I don't know that, but somebody's going to have to come out with something. Tips can be handled the same way, but we just have to figure it out and what's going to go from there.
That's wonderful. And Khalid brought up how does, and this is a question for the group, how will we prorate tips for couples above $150,000?
I'm not
And
sure
I
I follow the
see,
question.
I see a lot of people thinking, "Oh, that's a good question." Pam, you had a comment or question? You are currently muted.
Sorry about that. technology. I wanted to elaborate on the overtime issue. I believe that it was retroactive back to 1/1, if I read that correctly. Somebody had a question about, at what point do we need to start tracking this or helping the clients to track this, or when they bring information in. My understanding is it will go back to 1/1. I think the depreciation and being able to do the bonus was the only thing that was kind of triggered on a date during the year. But also, I think what I've read is we're going to need something to indicate, where the overtime, if a client's coming to us that we're not handling payroll, like Jim said, I think we're going to have to report it somewhere on that W-2 as far as overtime in some form or some type of attachment or something. So that was the only thing on the overtime. The tips, I read that supposedly IRS is going to have to send out a list of people eligible for these tips, because the people, the SSTB, the specified service industry, that the things that qualify for the QBID, those limitations are there. There's some industry, of course, that aren't going to be able to take advantage of this tip type, no tax on tips. And everybody knew that when you heard the big deal on no tax on tips. I could already figure out that it was probably for a couple of clients out there somewhere. So that's the case. And the married joint qualification too is so critical. So a lot of my clients, they like to file separate for whatever different reasons. So there's a lot of stipulations on both of these, overtime and tips, that and then you've got that cap, people that are eligible. But one thing that interests me was like massage therapists fall under that medical field, and beauticians and that kind of thing don't. But there's a lot of therapists out there that, I tip mine, I'm thinking, I thought she was going to be eligible for that. And from what I'm reading is that's not true, that they are one of the ones that will be excluded. But we're supposed to be getting a list of qualified taxpayers that fall under this no tax on tips category, from what I read. But I don't want to hold my breath till that comes out before the end of the year or before the required filing deadline. So that's my take on this, and it is certainly a lot of information. And then even the contributions for, and Mark will probably elaborate on this, but being able to take charitable contributions without itemizing, that's not in effect until 2026, because I was looking frantically for that, and that's not even a factor this year, which I thought was just crazy, because I was kind of excited about that. And so we're pushing that for 2026.
Correct. Yep. The charity comes in next year.
I'm sorry, Mark, if I got ahead there, but
No, you're fine. I wasn't going to talk about that at all, but yeah, you're right, though. It is
kind of aggravating, because I was trying to find it, like, with this big beautiful bill, I couldn't find it.
Yeah. So when I went back to Khalid's thing about prorating tips for couples above 150. So it's if you're single, it's 150. A married couple gets 300 grand of income, and if you're over that threshold, you lose 10% of whatever your income is in excess of that. So if your income is $10,000 over, you lose $1,000 of the deduction.
Great. Hi.
Yeah. I'm getting this horrible feeling, and I probably shouldn't, but given the fact that there's not going to be any W-2 reporting, 1099 reporting, of this stuff at this point in time, I'm getting a horrible feeling that we're going to get a minor repeat of ERC mills all over again. We're now going to have overtime mills and tip mills. And people, oh yeah, that money that you earned, that included $15,000 worth of tips. We can just make it up because the IRS doesn't know about it anyway.
Yeah, you're not wrong. I mean, like if there's no reporting, if they don't know about what that number is, I mean, I think you're right. It's just going to end up being that same thing. I mean, it's going to be to a lesser extent, right?
The dollar amounts obviously aren't going to be there, but I think back to, and the numbers aren't even remotely similar, so I don't want to make a big deal out of this, other than I think back to when I started with the IRS in 79 and 80. Back then, we used to have a thing called a political contribution credit, and it was like $10 or $20. So the old folks may remember that. I don't remember ever auditing a return that didn't have that credit on there. Everybody just said it's a free $20. I'm going to take it. Didn't matter whether you make a $20 political contribution or not. And anybody who's a waitress, anybody who's in hair care, they're going to have whatever the maximum deduction is. They're going to say, yeah, that's what my tips were. Put it on the return.
The tips I'm not so worried about. I mean, it's already it's already on your W-2, right? So the
Uh-huh.
employer is already supposed to be separating your tips from your wage on the
Yeah.
W-2, but
Yeah, on the W-2 side, yeah, but there's gonna be those independent contractors, barbers,
right.
beauticians, nail techs and all of that. There's
Mhm.
gonna be a number on the 1099, $48,000. You know, you're taking them on their word. How much of that is tips? You have no
Yep,
clue.
exactly.
You
So
know,
that's a really good segue to a point that Michael Salazar brought up. How are we doing reporting to create IRS validation? Are any of you thinking that far ahead or considering what you think will be acceptable?
I think we need to wait until the IRS tells us what this transitional relief is. I mean, they've got to give us some kind of guidelines as far as uh, for the taxpayer as well as for the employers. And I don't think we're going to be able to do anything until we get that.
Yeah.
yeah. Well, the new commissioner will probably tell us what that is.
Yeah, I'm hopefully in the next few years. Yeah, one of the things that I'm already concerned about because I've got two clients that deal with this is state and local tax on tips. So there's got to be a tracking mechanism.
Mhm.
W-2, and then of course and we've always had the issue with a independent contractor lying about the tip income. So I don't think that's gonna be any difference. But okay, so we have the tracking, we have it on the W-2, I guess is continuing, and then that's just ignored for income tax purposes up until a certain point of income. Is that how I read the rule? And that'll be for the federal, but then the state and local, that'll all still be subject to tax. Because the employers and independent contractors should still be responsible for tracking tips, even if they're not taxable. Am I correct about that?
Absolutely.
Okay. But the issue is going to be, people, because there are going to be, there are people who I mean, they work a restaurant job and it's, $6 an hour flat kind of money, and then they make, $1,000 a night in tips.
Mhm.
And most of that goes on credit card.
It's because nobody tips in cash, right? So they don't. I mean,
Right.
as far as those people that pay in cash, they just don't tip.
Right. So there should be tracking there, but I just see it because I mean, number one, I think a lot of people have heard it going, okay, I'm not gonna be pay taxes on tips. And isn't there a maximum threshold? Like once you pass a certain income, the tips are now subject to
Correct.
tax. And
Yep. So
I
it's
forget what that is.
yeah. So it's max 25 grand that we get to deduct for tips, but it's 150 grand for most people, 300 grand for married filing joint. If your income's above those thresholds, then you start to lose the deduction for tips
Yeah.
at 10% of whatever the excess over those thresholds is.
Okay. Okay. So that's the same rule for the
It's the same as
Social
the
Security
overtime. Yeah.
and overtime and overtime. Okay.
Yeah.
Judith
Okay.
Cobb offered that they use Easy ACCT for bookkeeping and have a field specifically for OT, which has the total paid OT. So 1/3 of that amount could be entered on the W-2 box 14 as Jim had referenced for 2025. So put that out there. Cindy also indicated that check stubs do have overtime year to date broken out for hers. How would a tax preparer, sorry, this is Miriam, puts out, how would a tax preparer verify OT if it's not on the W-2? Thoughts?
Look up at the ceiling and see if it just appears.
Yeah.
Kind of like that
And
$500 for non-cash contributions. I have no
Yeah.
idea. I mean,
I'm,
ultimately, we're not going to be able to come up with a number. So if we don't, I mean, the client's going to have to come up with something, right?
Yeah.
But I don't
Well,
know.
like you said before, Mark, I mean, the pay stubs, would probably work in a lot of cases, but again, you can't differentiate between Costco that pays time and a half on Sundays, or an employee who pays for time and a half for over 5 hours, when the law says 8, in that particular state or whatever. You're not going to be
Yeah.
able to differentiate that at all.
And I just looked at my pay stub, and it does not track, it does not list the total year to date overtime. And it only, my total year to date number is only one number, and that's just from all sources. It's not segregated out based on the type of pay.
Mhm.
It's segregated on that specific pay stub, but not for the year-to-date column.
Are you paying
So-
yourself overtime?
I'm not an owner. I'm just an employee.
Well, that's
So
oh, I'm just wondering. Maybe I need to give myself a raise. No.
Right. Nancy has a great question. What about the expiration of these credits? Is it 4 years that they're currently listed at? I'm sorry, I don't have it in front of me, but I assume some of you will know.
yes, yeah. So they're through 2028. No, that date is, I don't know. I think it's pretty worthless. I mean, the only reason that they have that is because they with the reconciliation process, they can't spend more than that certain amount over that 10-year period or whatever. So they have to limit it. But if we go back to we had these extenders going back to, was it President Bush, with the 10%. So every year they would renew these extenders. So yeah, they were temporary, but I mean, when is anything really permanent? Right?
Right.
So it doesn't really
Uh,
matter much to me.
Mark, Michael brought up he met a fellow accountant that includes a tip line on their invoices, and he receives tips. This accountant, and earlier we had briefly a couple people had mentioned in passing as part of their comments the groups that are allowed to deduct tips and not. Could you talk a little bit about that?
Yeah, I don't think we're gonna qualify. So there's a something in it. So it has to be industries that customarily and regularly received uh tips prior to the big beautiful bill, or prior to last year. So it's just, yeah, if it happens, that's great, but we don't regularly get tips. Um I wish I could find quickly. I got the bill pulled up here, but there was something in there that said, yeah, so it means tips received by an individual in an occupation that customarily and regularly received tips before 2024. So, and then it says the secretary is supposed to tell us what those industries are. So I think they also stripped out the SSTBs, like Pam had mentioned, but then they're going to tell us those that specifically will qualify, and I can't see any reason why we would. I mean, I'll get gift cards or something from clients, but it's not a regular thing.
Right. Great. Sorry, I was looking through the chat. For some of you are asking questions or have comments in here, and I'm trying to keep up with it. But if I don't call out your comment, if it's already been engaged, that might be it. But feel free to put it back in if it hasn't been addressed here, and I am doing my best to stay on top of those. Mark, I'd like to now move on to our second question, now that we're halfway through the event. How do proposed changes to small business taxations, especially pass-throughs versus C corps, shift your guidance for entity choice or structure?
Personally, I don't think it changes very much at all. I mean, obviously now we have the QBI is supposed to be, what they say it's permanent, right? Permanent until the next Congress changes it. But, you know, especially in regards to C Corps, I don't think it really changes much. But maybe it's just because in Wisconsin, our corporate tax rate is 50% higher than the individual tax rate for most taxpayers. So, and that's the same reason why we don't deal much with that SALT workaround like we have, because we have to pay, if we want to use that, we have to pay the state 50% more. So it oftentimes negates that. But ultimately, I find that, it's going to be industry specific, right? What's the best choice of entity for this specific taxpayer is really industry specific, right? So I find that since the Tax Cuts and Jobs Act, that the reduced QBI for S corps kind of negated for a lot of different clients the benefit, or the Social Security tax savings that it would offer, especially with like a consultant that isn't going to have any other employees, or much, where we kind of lose a good argument about having more distributions versus salary. Certainly, it's going to be different with a restaurant that might have pretty much everything is based off of employee labor. So you'd have a good argument for lower salary versus distributions. But I found that losing that QBI deduction, along with that added cost of payroll and unemployment tax, and The added cost of an S corp tax return meant a lot more people were better off as a Schedule C than they were as an S corp. So, and then when you figure in that we also get a reduced Social Security check when you're an S corp, um, it kind of changes the analysis a little bit for me. But really, I don't think much changed with this. And we have a bigger phase out range for the QBI deduction now. So that kind of makes them even, the Schedule C a little bit even better because of that. But yeah, it really doesn't change much for me though.
Cool. Does anybody else want to comment on that for their particular state and scenarios? Okay. Mark, are there planning opportunities or pitfalls in the proposed updates to capital gains, depreciation, or investment related taxes?
I think the biggest thing that we really deal with is just like the depreciation, change. It's really just, bonus being back. But really, we don't really deal much with bonus anyways. Like most clients, like even when bonus was 100%, we were typically taking 179 instead, whenever we could. Wisconsin doesn't go along with bonus. So we would kind of lose that if we would take it. I mean, the biggest areas I see where bonus is gonna, actually, be good or be beneficial here is, somebody wants to accelerate depreciation on like a like a SUV or a pickup truck with a bed that's shorter than 6 feet. Um, in those cases, 179 is limited where bonus wasn't. So, but otherwise, I tend to just go along with 179 anyways. I don't think there was much as far as what changed with capital gains or investment, like the net investment surtax or anything like that. I know there's something with qualified small business stock, but it's just not an area we really deal much with. So,
Right. The Roth conversion capability has been improved for people. I mean, basically with the inflation adjustments and then the Social Security deduction, people are able to do about another $7,000 in Roth conversions and still end up paying the same level of tax. So, that's an area where a lot of people could take advantage of it.
Bill, can you describe that in a little more detail?
Yeah, so whenever you do a Roth conversion, it's simply that, that income, that gets added onto your income. So if I'm going to do a $50,000 Roth conversion, it's $50,000 more of ordinary income. So typically big conversions, you don't really want to do in years where you're, earning a lot of money because W-2 is ordinary income. Now this Roth conversion's on top of it. People have Social Security, IRA withdrawals, IRA withdrawals are ordinary income. So, for some people, especially sometimes when they're delaying the Social Security tax anyway, up to the age of 70, they'll get the the 65 and older additional credit, another $6,000 potentially. They can then do a Roth conversion, equivalent to $6,000, and they pay no additional tax. So as long as they're not just passing some important thresholds, where phase outs occur, most people are going to be able to do $7,000 in Roth conversions
Doesn't that
each year.
stop? Doesn't that your adjusted gross income stop that at a certain amount and you do not get it?
Yes, correct.
Okay.
But there's also, there's also backdoor strategies as well. But yes, you are correct as far as, but a majority of people don't actually hit those thresholds. So, and now they get an extra deduction anyway. So I think there's going to be some opportunities there.
Yeah. Well, you may also have some opportunities, Mark was talking about like claiming the 179 deduction versus bonus, or even if you're doing
Yeah.
bonus, you use that to get your income down you get yourself down into the 12% tax bracket and then do a Roth conversion, of take a $50,000 179 deduction and then do a $50,000 Roth conversion, basically it's a free conversion at that point, more or less.
What was the other? There was a question earlier I saw. Married filing separate tax returns are not entitled to any of the tips deduction.
correct.
I don't know. See, I thought it was per the taxpayer regardless of the filing status.
So There's a section in the bill on for married individuals. It says if you're married within the meaning of 7703, you only get it if the taxpayer and the taxpayer's spouse file a joint return. It's gonna be it's gonna
Okay.
be the same as any of the other marriage penalties when you're filing separate. Whereas if it's income based, they don't want one spouse to have higher income and the other to have a lower income, and then married filing separate to try and get a deduction when they wouldn't get it if they were filing joint. So they're just saying, hey, if you're married, you just get nothing if you file separate.
Yeah,
Okay.
that's it.
Um,
On a minimal basis, I think that's just going to add to the number of returns we're going to see. Maybe after the fact, even married couple, they're filing separately, but they both went to the same guy who had them both as the head of household. Saying each one claiming the kids and that kind of stuff. And there's going to be a little bit more of that going on now to take care of take advantage of this tip deduction as well. It's just another reason for people to commit fraud, basically.
You're right. Yep.
One question I have, which I wasn't clear on from the bill, and I've seen a few articles published recently about this, but there's concerns about the Social Security Trust Fund and how the senior deduction affects that. And typically, when taxes are collected from Social Security income, that all goes into the trust fund. The Treasury, does put that into the Social Security Trust Fund. The senior deduction, the $6,000, you don't need to be taking Social Security from that. If people are claiming that deduction, that's not coming out of the Social Security Trust Fund. That's coming from general revenues, correct?
Yes, but I think the thing is that so it's really a backdoor way. It will impact the trust fund, because if somebody, well, let's just say somebody is paying $1,000 in tax because some of their Social Security was taxable, right? So that's going into the trust fund. But now with this new deduction, they're not going to pay any tax, period. So now the trust fund is going to lose that $1,000 that was really paid on Social Security tax, but because of this new deduction.
Well, I guess that's my question, because the thing is, because the Social Security does calculate the tax, I would think that's calculated, that goes into, ultimately the Treasury has that obligation then to the trust fund. The fact that there's a Social Security senior deduction of 6,000, that comes against the general revenues of the government. It should not be basically the way I was interpreting it when I read it was that the Treasury still has the obligation to pay the Social Security payroll taxes, so the Social Security taxes, income taxes, to the trust fund, even though the government's not getting that revenue. This is going against general.
I think if somebody was still paying tax and the amount of tax that they pay on their Social Security isn't really changing, nothing would change. But for the taxpayer that has lower income, and this deduction eliminates their tax completely, I would suspect that. I don't know, but I would suspect that it would reduce what is going into the trust fund. So it's kind of a backdoor way to impact, the trust fund.
Okay, I wasn't sure as far as in reading it how. I guess the big concern is how do they even implement this and track this, but okay.
Yeah, Mark, you said, but the deduction, this new $6,000 or $12,000 deduction, it's a 63 deduction, not a 62 deduction. So the amount of Social Security that's taxable is going to be based on AGI, which is going to be before this deduction anyway.
Correct.
All right.
Right, but I mean, with the high standard deduction, you could be paying tax on Social Security before, where you have a net tax, right? I'm not talking about what portion of Social Security is included in that income because of the calculation, but you could have a net tax before and not have a net tax now because of this new deduction.
Right. I'm just trying to figure out, but how does that affect the amount of money that's even going to Social Security? They're not getting any of that money anyway. It's an income tax.
Right, but but the income tax, Social Security was going to the trust fund. The income tax that you pay on taxable Social Security goes to the trust fund.
Yeah, I was just thinking it's a different government account.
But that's what I'm saying. But that number isn't going to change.
Sure.
By virtue of this $6,000 or $12,000 deduction, because taxable Social Security. Okay.
If my net tax before was $1,000 and I'm paying tax on my Social Security, right? We could say that all of my tax was because of my taxable Social Security.
Okay, I got you.
But now I have a deduction.
So my net overall tax.
Yes, my net overall tax from all sources now is zero. Then nothing's going to the trust fund.
So a smaller percentage of your total tax was attributable to the Social Security then.
Correct. Right.
Example. Okay, I got it. All right.
No.
Great. So, shoot, James Perkins brought up another question. Ooh, why are you? Sorry, my technology is not working quite the way I want it to. Will the additional SALT deduction up to $40,000 now bring more people to pay alternative minimum tax?
That's a good question. I'm not sure. I haven't really looked at the AMT aspect of it. I thought they had increased the AMT exemption also, but that's just off the top of my head. I didn't really look much into the AMT side of things. Um, so
Good. That sounds like a topic for another webinar in November. So on the credits portion, Mark, I'm going to move on to our next question, which is what changes to family and income-based credits, CTC, EITC, dependent care, should clients with dependents be thinking about now?
I think the dependent care is really the key thing that we can do something about now, or because we'll need to make a decision before 2026 as far as whether they're gonna use the dependent care benefit program through work, or if they're gonna take the daycare credit. Right, it's not something that you really oftentimes get to opt into the dependent care mid-year. At least most employers don't allow you to, that I'm aware of anyways. But the dependent care benefits now 7,500 instead of 5 grand. Both the dependent care benefit change and the daycare credit change are 2026 changes. So nothing for 2025, but we need to plan for 2026. So we get the higher amount for dependent care benefits. The daycare credit amount doesn't change. So we're still based on the $3,000 or $6,000 for 2 kids. But now there's 2 different layers to it. Historically, it's really been, hey, everybody, you get 20%, right? If you have a net tax, you're going to get 20% credit on your daycare expenses. But now they add another level to it with another phase out. So now if income's below 75 grand, or if you're married joint 150 grand, now you get 35%. If your income's over 105, 210 if you're filing joint, you're down to the 20% that we were already getting. But then if you're between that range, the credit percentage changes, pro rata, dropping from 35% down to 20%, depending on where in that range you are, right? So we have a difference in, the credit percentage that'll count. So I think the difficult thing here is, well, what's better? What's better to take? Do I want to take the dependent care benefit, or do I want to take the tax credit? Historically, it's typically been better just to take the dependent care benefit almost in all situations. But now because it reduced FICA, right? So we saved that 7.65%. But now we have to do some math. If somebody's in the 12% bracket, the dependent care benefit's worth 20%, right? We get the 8% for FICA and then the 12% bracket for federal tax. So we're saving on 7,500, $1,500 in taxes. But if I get a 35% credit on 6 grand, well, that's $2,100. So now my tax credit will be better than the dependent care benefit that I'd be able to get through work. And most of the clients I'm not going to talk to until next February, when it's too late to change their mind on this. So now it's even more fun depending on what your state rules are. Like in Wisconsin, we get to count 20 grand worth of daycare plus at a 20% tax credit. Plus, we get to exclude the same 5 grand for the dependent care benefit. So we get to really count 25 grand. So our daycare thing is really big, but depending on what the total cost is, we got to figure out, hey, which one really is going to be better, because it's not just going to be a one size fits all like it used to be. I think that's the biggest thing. The other big thing that didn't actually change, that most people probably don't know about, is the original House bill had a pre-certification for EIC, where you're going to have to apply to the IRS and prove to them before filing your tax return that you would qualify for EIC, and submit documentation, everything, and that got stripped out. So Thankful for that. That would have been a nightmare. Otherwise, yeah, I mean, the child tax credit's a little bit higher. EIC, nothing really changes. What's going to happen with the W-4s though, because of these, right? So, are they going to, right, like the W-4s were changed in 2020 to give the $2,000 for the child tax credit. Now that it's 2,200 and indexed for inflation, what happens in the future? Are they just going to change that amount on the W-4, or do we have to fill out a new W-4 to use the higher amount, or what do we do?
They still haven't fixed the one from 2018. Yeah.
Well, honestly, that one, I think that one makes sense. I think I'm in the minority, but I write formulas, like I write a spreadsheet every year that has like the payroll tax formulas in it. So it's like there's actually like a science to the new W-4s, right? So it's just figuring out how that works to tell the clients how to what they need to do on their W-4s to get the
Mhm.
desired result.
Yeah, I've actually just had a lot of my clients, who have had issues with the W-4 and it just doesn't work out. I just tell them, and a lot of payroll departments don't want to do this because their computers aren't programmed for it. But percentage method of withholding is still allowed. It's still allowed under the law. Go in and tell them, I want 12% of my pay withheld. Period. You guys figure it out. Put it in the computer and figure it out. That's what I want withheld.
Yeah, I don't know. I mean, typically the people that have the problems are either going to be people that are over, into the 32% bracket where their bonuses isn't getting withheld at the right rate, or like
Right.
if somebody's married, they just didn't check the box on the W-4 that says, hey, if your spouse is working, check this box.
Mhm.
Um, and that's so there's going to be under withholding, or both people are claiming both or all of the kids, so there's they're both getting that benefit, so they're having to repay there, but that's typically the problems I see with it.
Well, I always see the issue of people with part-time jobs,
Yep,
because
that'll hurt.
because it's also a thing that what happens is some of the smaller employers, when you're doing a part-time job, the W-4 is not understood by the HR person. You fill it out real fast, send it in. All of a sudden, a person has an extra $10,000 tax liability
Mhm.
at the end of the year because of two jobs.
Right.
And the program for low income, like multiple jobs and low income, W-4 does not work. It's not accurate.
Uh,
Yeah.
yeah, I mean, if somebody's single, if you check that multiple jobs box, it'll be fine at both jobs. But if they're married, then you really have to check single plus the multiple jobs box to get it uh, to work out. Otherwise, I'll tell them, just at the higher income job, just add on that extra income line the income that you anticipate from the other job, and then the main job is going to withhold the tax on the main job plus the part-time job. But
Yeah, I mean,
certainly,
it's just gotten to the point now where we're doing a correct W-4 form or W-4 forms, as the case may be. It's almost like you're having to prepare another tax return, really.
right,
Yeah.
and they expect it for free.
Yeah, yeah.
They don't realize how much actually goes back, goes into that or whatever. But I don't know. Like the spreadsheet that I do, it'll have like all I do is enter, hey, here's what their income is going to be and how they fill out the W, or I enter how we'd have the W-4 filled out, and it'll tell me exactly on a per period or per pay period basis or an annual basis what the federal withholding is going to be. So I mean, it takes me 3 minutes to figure out how to get somebody's W-4 filled out to withhold the increase, the extra withholding that I need them to withhold compared to what they're at right now.
Mhm.
So
Yeah, I'm going to
Uh,
put in a little bit of a plug here. CFS, the people who do the tax tools program, they also have a W-4 calculator
okay.
in the past that works pretty well.
Another part of the one big beautiful bill that I see people tripping over is the rules regarding the government's not going to send checks now to people, and they won't accept checks from people.
Yeah, I don't think that was from an executive order back in March. But nothing's actually
And
happened with that I'm aware of. I think it was just a
no, Social Security has announced they're going to stop sending checks, and the federal government's has stopped accepting checks for like payroll and that type of stuff. You have to now do electronic transfer.
okay.
Checks are being mailed. Checks are being returned to people saying you have. And now, of course, okay, is that a late thing? But I mean, that's all that's all starting and due to start. But there was just an announcement. I forget from which government agency. I thought it was Social Security that they were. It's like, no, you need to set up the electronic, the ACH stuff. And I thought that was also included in the one beautiful bill, not just the executive order, but okay.
No.
But all right, but I was
it's
wondering if people have seen issues with that yet, as far as how employer is going to handle that,
Yeah,
or individuals.
it's really just an order to Secretary of the Treasury to come up with rules on it. But there's even part of that executive order said, hey, we need to make exceptions for people that are underbanked, right? That don't have the ability to get checking account or something like that. So I can't see a way where they just absolutely cut it off. I think there's going to have to be still ways for them to come up with some type of system that isn't absolutely electronic like that. But I mean, really, we already have the no electronic or only electronic stuff for most business stuff. So it's really just going to be individual stuff that's impacted, I think, right? Like payroll tax, we have to submit electronically. They penalize you if you write a check. So
Yeah, it's September 30th is the date under the executive order.
mhm.
Modernizing, what is it coming from? The executive order modernizing payments to and from America's bank account. Let me see here.
Will they accept cash?
No.
Pennies?
No. And yeah, tax obligations effective September 30th for the federal government. Tax payments, fees, fines, loans, all the receipts are to be done electronically, not by paper check. Now it does say to the extent permitted by law and as soon as practical. So they've got some caveats in there. But I just, I've got clients who, do payroll checks where they send in, a few things by paper check, and it's like, they can't do it anymore, which means that they gotta, they gotta remember their electronic access. But anyway.
Yeah. Well, I mean, I think it's going to cause a little bit of a cluster too. How are you going to go to an IRS office and make a payment if they won't take your check? We want you to come to our office on on August 23rd and make full payment of your taxes. How? You won't take my check.
Yeah, they're going to want you to access your online personal account on the IRS website and pay it electronically. Yeah, I can see a lot of 80-year-olds and a lot of low-income people just, oh yeah, I have no problem handling the IRS website to pay my bill.
AE, I've got your hand raised. Go ahead.
Yeah, what about on estimates? We've already given people their schedule and their coupons. What about estimates? They won't take checks for that?
No, nothing's actually happened. This is just an executive order. It doesn't have like the weight of law. It's just a order essentially to the Secretary of Treasury to come up with some rules to stop doing this or to change this. So it's not like they're saying we can't do this anymore. It's just they're supposed to give us some rules by September 30th to change this. But we don't know what those rules are because they haven't, and there's not even anybody that's really in charge anymore, right?
Well, again, the new commissioner will give us the rules.
Right, along with the 30 other things he has to do that the big beautiful bill puts on his plate, right? So
I've got Miriam and then Jim.
Hi. So as far as the IRS no longer accepting checks if they try to make that 100%, so I have several trusts that I file a 1041 for, but they are managed by a bank, a professional trust company. And they tell me, oh, for estimated tax payments, we don't do electronic payments. We will issue checks. You give us the information and the vouchers, and that's the policy of the bank. So what do we do there?
I guess we don't have to pay our taxes anymore. I have no idea. I mean, I can't imagine this is going to be a high priority for them to figure out. I mean, I guess we'll see what happens, but certainly they're going to have to consider everything, right? And I'm sure there's going to be exceptions to that, right? But
I mean,
Jim?
sadly, it may not be a high priority. I'm sorry. So I just want to say real quick, it may not be a high priority for them, but it really needs to be because again, they're cutting their staff. You mail in a check, it's going to sit there for 2, 3, 4 weeks. you know,
I don't think the IRS actually processed checks anyways. They went to the bank, didn't they?
yeah, they go to,
Those
yeah,
black
it's a,
boxes.
yeah, call box kind of thing.
Yeah.
Yeah.
Jim?
Uh, I just had a response for Bill. I figured it out and I'm 82.
Agreed.
Uh,
And when Dora offered,
Change isn't easy.
when Dora offered that she actually made a sheet to give to her clients, the top half is set up for the full ID. On the bottom half, it's just getting the PIN and website to pull from the bank account. And we already talked about estimated payments and payroll checks.
But by the way, if you happen to be a financial advisory firm and doing taxes, you can't have that info. That's
Right.
taking custody of the account. So just want to remind anybody on that you are not supposed to have access to PINs or anything like that, because then you are the custodian of that account, even though you have absolutely no control over it really.
Right.
So
Thank you, Bill. And thank you, Mark. We have hit 3 o'clock. We're just a touch over, but I'm gonna call it. I really appreciate all of you coming in. I could see that this was a good topic of conversation. Kemi and I will look at setting up a follow-up to this in November to see if we have any new updates on what's going on and whether or not the IRS will reject our money or accept a check, or if 82-year-olds like Jim can still handle their own taxes, and we'll go from there. But again, I really want to thank Mark from coming in, standing in front of the firing squad and offering up his thoughts, his comments, his research, and what he's doing. Really appreciate you, Mark, very, very much. Thank you.
Thank you,
Thank you,
Mark.
Mark.
Yeah. Thank you.
And again, I want to thank all of you for coming. This has been one of our best attended sessions, and we'll put the recording together and make it available early next week.
Where do you find the recordings, Joshua? If I
They'll
wanted
be
to
on
find
the-
the recording, where would I find it?
Yep, it's on the website under the education page. We
Okay.
have a list of all of our past recordings, and we also keep them in our YouTube channel. So if you search for the NSA on the YouTube, you will find all of our past recordings there as well.
Thank you.
Thank you all very much.
Josh,
you.
real quick, if you could
Yes, sir.
also, Josh, just keep in the back of your mind somewhere, if we get any new guidance, like any new major guidance, anytime, even within the next couple of weeks before November, I'm going to call it an emergency tax talk, for lack of a better term. We
Excellent.
might want to have another meeting if something major happens, to clear up all the stuff that we're confused on right now. We don't
And
want to
we-
wait until November to talk about it.
No, absolutely high. And I grant you permission to call me directly and beat me over the head and say, Josh, we need this next week. Just give me a couple days to be able to announce it to everybody. And also keep in mind that we monitor a lot of this stuff, and it comes out, responses like that come out in the newsletter as well. So when things come out that trigger some of our folks that are monitoring this, we actually put this into the various newsletters that come out. So scan the top and see if we have some responses and updates on these types of things.
Yeah, yep, I'd be more than happy to beat you over the head, and as long as Mark's in charge of the meeting, I'm good.
Thank you all again.
All right, take care.